spotlight speaker, Chami, who has a very long resume, and I'm going to get into that a bit with him. But in a nutshell, Ralph is he's an economist and a financial expert. He has spent many years at the International Monetary Fund, also did consultancies at the World Bank, knows a lot about the global economy. And I got to know Ralph a little bit recently. We chatted when I learned about the organization that he co-founded, Blue Green Futures, which I have been showing the website and some of the videos to in our WhatsApp group chat. For some of you are already familiar, and that's why you're here. You are very excited to meet Ralph. And what we're going to do now is just Ralph's not going to show a PowerPoint. We're going to show two very short videos that probably a minute and a half altogether, just to tee up our little fireside chat conversation. So Kartika, if you can show those, and we'll frame our talk from there.
In the current paradigm, markets have an extractive relationship with nature, leading to the destruction of nature, the eventual demise of markets, and putting all of humanity at risk. In the new paradigm, markets help to regenerate nature, leading to nature thriving, markets thriving, and humanity itself thriving.
And we've got one more very short video.
You have two powerful systems. You have nature system and you have the market system. I come from that world that nature is infinite. And if something is infinite, why are you worried about it? You can cut, destroy, pollute with impunity, and somehow it will always be there. For the longest time, us in the markets left nature to people that cared about nature. But that ambivalence allowed something to continue to happen. Markets that are far more resourced, trillions of dollars, far more politically powerful, to operate in a manner that was only extractive. Now, when you destroy nature, what happens? It boomerangs back to you in something called climate change. At the rate we're going, there'll be nothing left. That ambivalence is deadly. We have to change that relationship to say, what is missing from this equation? It's the regulating side of nature. That's the part that markets never knew about. If you leave nature alone, if you allow nature to live for itself, you, the markets, are going to benefit. The story I'm telling you is about something that the markets have missed completely. You can also think of seagrass. If you leave seagrass alone, the seagrass is clonal. It's like a tree on its side. When you protect it, it actually grows. After 30 years, there are billions of them. Just in carbon sequestration alone, seagrass is worth over $1 trillion globally. The first advice is to the local communities or the governments that own the asset, never sell down the line. Principle number 2, the money has to come back from the sale of the credits to look after that nature in perpetuity. And we have to recognize the role and responsibilities and the relationship of the indigenous local communities with nature. First, you have to anchor yourself. Number 1 is science. Number 2 is the methodology that is being applied. Number 3 is the verification of that is exactly what's being used properly. Number 4 is producing the expected schedule of the delivery of what, if in this case, it's the carbon credit, expected. Okay, if you like, in the language of finance, producing the forwards. Forward contracts are important because they bring money early into the process. So the local communities get the money, see the benefit early on. So what is the rate of return on investing in projects that BGF is involved in? In the case of the Bahamas, the minimum rate of return guaranteed is 25% rate per annum. But remember what you're really doing. When you protect and restore seagrass, not only are you getting the carbon credits, but healthy seagrass enhances fish stock. So that's food security for the people because most of their food comes from the sea. When you have healthy seagrass, you're staving off flooding. This is the new paradigm. This is the win-win. 30 years from now, hopefully it'll be sooner than that, nature will be present in every conversation that we have.
Great. Well, Chami, so nice to have you with us. Welcome to our team. I have become a huge fan of yours and your organization. So I really want to, I want others to get to know you. And at the end of this conversation, talk about how we can, collaborate and learn more from you and your team. So, but first, let's start by, asking, people here probably want to know how did a senior financial officer at the IMF end up, running or starting an organization with Green Future? What's the connection between what you did before and blue whales and all this other stuff?
First of all, thank you, Steve. Thank you all for joining this meeting. And first of all, can you hear me very well? Just to make sure.
Yes.
All right. So the quick answer to your question is it's never too late to see the light. So, and there's an old saying, very old saying that says, once you see the light, you don't dwell in darkness. For me personally, the personal journey was I was a mission chief and division chief for fragile states. In fact, I co-authored a book on it, 2021. It's called Macroeconomic Policy in Fragile States. And I spent quite a bit of time on the ground in many of these fragile countries, if you like. And then I became fragile myself. Because these are very difficult situations, and it really makes you a much better person, much better economist, actually. But however, I reached the point where I was really very tired, and so I bumped into a friend that I hadn't seen in a few years, and she looked at me and right outside the IMF, and she said, "Ralph, you look like hell." I said, "I feel like hell." She said, "Why don't you, if you need a break?" I said, "Yes, I need a break, but I'm not the type that go sit that grab a book and sit by the beach or something. I need something else." And then she said, "What would you like to do?" And till today, now I'd like to think that somehow the providence kind of guided me. But at that time, I have no idea why I said, "I'd like to see the great whales." Don't ask me why I said it. I have no idea. It's not something that I was involved in, or I was not an environmentalist, did not grow up to be an environmentalist. I was very much in the markets. Anyway, so, and to my surprise, my friend said, "Oh, I belong to this group that studies the great whales. Would you like to come with us?" And make a long story short, 2017, I ended up on a boat with a bunch of strangers in the Sea of Cortez who were tracking and studying the blue whale. And on my first outing, literally, in a 25-foot boat, this magnificent creature came out of nowhere. And so everything changed that day. So there's Ralph before 2017 and there's Ralph post 2017. Because the first thing that occurred, and remember, we were in a 25-foot boat, and this magnificent creature just surfaces next to us. She's feeding quietly. She's about 100 foot long. And I was raised by the Jesuits, so the first thing that came to my mind was Jonah's story must be true. I had never seen anything like this in my life, except that Jonah's story had a happy ending. I wasn't sure what kind of ending we were going to face. Make a long story short, she was, but I felt no fear, nothing. She fed quietly around us under the boat. She could have I mean, you have to understand how big, it's not how long they are, it's how big they are. You can fit an African elephant in her mouth, would disappear completely. That's what we're talking about. And the thing that struck me that day personally is I didn't know anybody on that boat except for my friend, and you have to understand if I'm a mission chief. I've been mission chief for many, many years at the IMF, and people make fun of us. We're like men in black. I had 22 suits in my closet. I think 20 pairs of shoes, 47 shirts, and I think I had two pairs of jeans and 10 t-shirts. That's it. So basically, our life isn't. So here I was on a boat in shorts, and I had to go out and buy shorts for that trip, and sitting there thinking, what am I doing? Until that whale showed up, I was thinking that was a mistake that I would come on this trip. But when that creature appeared, thing that struck me, aside from the story from from the Bible, is where have I been? Because I'm looking at a creature that's looking back at me, and the creature is saying, "I see you, but do you see me?" And I remember, and I had tears in my eyes. I did not want anybody to see me. I couldn't stop because I think it was like, how is it that I thought I was well educated? I have degrees in number of fields. How is it that I didn't know you existed? Anyway, so that's how it started. And then at night, we lived in two houses, and we would cook together. And we were sitting around having wine, and I overheard a conversation about whale carbon. Now, my first degree is in sciences, so and I said, but we're all carbon units. And they said, yes, but do you think you have enough carbon, as much carbon as a whale, as a great whale, such as the blue whale that you just saw? And I said, of course not. But what are we talking about? And one of the senior people said, why don't you go read a paper by Andy Pershing, Educate Yourself. So as they're all asleep, I'm in my room. This is in Loreto, Mexico, Baja. And I downloaded the article and I fell off my bed because in that first table, he basically is showing you the amount of carbon per species of the great whales. Now, of course, we being economists, and I'm a financial economist, we like to know on average, how much. So I had to calculate an average, and the number so I created an Excel spreadsheet. Basically, I didn't sleep that night. Discovered that a great whale, on average, would have about 30 is keeping on its body about 33 tons of carbon dioxide. I could not believe that number because so I was like, so that's how many trees? And that was about 1,500 trees. It's like, what? Does anybody know this? Because I was like, so I started Googling, right, all night, like, has anybody published this? No. How come no one knows this? Reason this was important because at the IMF, we were trying to figure out what would be the price of carbon that would not scare everybody, but would hopefully change society's behavior in terms of pollution. And the IMF was pushing a number, a dollar amount for a ton of carbon. So I was already well versed in that way, but I had no idea that whales, first of all, that animals had anything to do with carbon. We're all raised to think it's in the trees, let alone in the ocean, really. And then the next day, the conversation continued, and they were saying that the whales, well, these great whales feed on krill. And krill, so in your head, think of a triangle, if you like. The base of the triangle, the whale feeds on krill. The next arm of the triangle, the krill likes to feed on zooplankton or phytoplankton. And then the phytoplankton, to thrive, it needs phosphorus, nitrogen, and ferrous or iron. And guess where they find these three elements? In the poop of the whale. So that's what they were saying in front of me. And I was thinking, wait a minute. So these whales are very smart. Well, they eat a lot of krill, and already papers on this, how much they have a huge appetite, and they defecate, and that poop actually has in it the ferrous, the limiting factor, especially in the Southern Ocean, and also in their urine and in their feces, there's nitrogen and there's phosphorus, and that makes the phytoplankton very active. So there's more phyto, then there's more krill, and there's more food for the whale. You get this beautiful virtuous cycle. But where this story becomes even more interesting is that the phyto is where the biological life of the ocean starts. Phytoplankton captures on average per year about 33, between 33 and 37 gigatons of carbon dioxide. Imagine that phytoplankton, microscopic organisms, if you look at Woods Hole website, it captures about 37 gigatons of carbon dioxide. So that's like 4 Amazon forests per year. So here I am sitting at that dinner on my third glass of wine, and I was thinking, wait a minute. So there's carbon on the body of the whale, and then the whale is kind of through just living its life, is fertilizing the phyto, and the phyto is becoming more active and therefore grabbing more carbon dioxide. So I asked the question which changed my life completely. I said, has anybody valued the service that the whale is providing? Of course, the people sitting around the table are not economists or finance people. They're like, what are you talking about? Why would you even? I said, look, first of all, I've never heard that the animals had anything to do with the carbon cycle. I should have known, but I wasn't there. And what you're telling me is, the whales through by living their life. So that's the language I use now. Nature living for itself, meaning this whale is frolicking freely in the ocean. It's not in an aquarium, just living her life. Is helping to fight climate change. Is helping to regulate the climate cycle. How beautiful is that? And I was sitting there and I said, but has anybody valued that service? And they said, we don't understand what you're saying. I said, well, okay, I work for the IMF and I provide a service and the IMF pays me a salary. If this whale could speak our language, because they do speak a very sophisticated language, it's just not our language, and maybe she'll say two things. One, please stop hurting me because I'm keeping you alive and I have as much right as you to exist. And two, hey, by the way, that service ain't free, Chami. You get paid by the IMF for your service. Why don't you pay me for my service? And my service is far more important than whatever economic advice you're giving the IMF. And I would agree with her. I would certainly agree with her. So, so there you are. That's that. And so at that point, they looked at me. They're like, "Can you do this?" I said, "Yeah, of course. I'm a quite quantitative. I have a physics background, math background, and all this stuff. And yeah, if I know the population growth model and maybe I can give some. So fast forward. So this really that's the question that changed everything, which is what is the value? And of course, I can tell you now why this is important, but please understand, this is not like a vision that I had. More like of an accidental tourist. I just stumbled into things and I was kept asking questions. And with every question, something was revealed in front of me and I pursued it. So can you value the service of a whale? And I said, just let's ask the carbon side, because the scientists were telling me the whales do a lot more than that. And of course, they're ecosystem engineers. And I spent 3 years tracking those whales in the Sea of Cortez. And I've learned quite a bit about what they do and how they live their lives and all that stuff. But the important thing is that's really how it started, asking the question, what should be the salary that you would give the whale if she was actually, if the markets were to give her a salary for. And so make a long story short, I made a promise to them that I would write that paper. I tried to get out of it because I kept asking myself, I'm going to look like a fool. I mean, that's not my area of expertise. I'm a professional economist. I'm an expert in banking and financial sector and all that stuff. What the heck am I doing? So I tried to get out of it, but my dear friend Dinah Nieberg stayed on me. It's like, you made a promise. You made a promise. You have to deliver. So Anyway, and with colleagues of mine, Tom Cosimano, Conal Fullingham, and a young person who was at the fund at the time, we wrote the first paper saying, this way living her life just for herself, not even aware of our own existence. She captures carbon over her lifetime, either on her body or through her fertilization, on average, worth that service over her lifetime is worth at least $2 million. That was the 2019 IMF public. And the reason that was important because we only had a value for the whale when she was dead, chopped to pieces and sold for meat. In some countries where that persists in eating something that is actually not good for their health. I'm not going to name those countries. I think you know them. But the dead fin whale there fetches $40,000. So in death, she had a value. She had a price. In life, she has a value, but she had no price. So I was just trying to say, look, this whale alive and well. Amazing. If you leave her alone, leave her to live life for herself, as nature deemed it be, she produces so much value for humanity, aside from the intrinsic value of life and the preciousness of life itself. And the reason for this is now I can, that's where that video that you just shown is important, is because people do not understand. I come from the markets. I have 35 years in the markets. To say to the markets, we don't care about you is really not very smart thing to do. Because even if you say to the markets, the conservation people, we're not interested in you, the markets say, but we're interested in you. We're interested in nature, and we only see nature through an extractive lens. So if you don't educate us, the markets, we will continue to do what we've been doing for the past 400 or 500 years, which is destroy nature with impunity. So when I started doing that with the whale, then another scientist called me from Paris. He's an expert on elephants. Called me at my office at the IMF and said, hey, with his Italian accent, he's like, hey, man, you're helping to save the whales. Why don't you help me save the elephants? I said, I know nothing about the elephants. What do they do? He said, they do the same thing as these whales. These are the elephants, the forest elephants in the Congo Basin. He had studied them with his colleagues. I said, yes, how can I help you? He said, well, they help to sequester carbon in the trees. And the delta is 14%. I was like, are you kidding me? Of course, when people tell me stories like that, usually I smile a lot, but then I say, can you send me papers so I can read? And he had published the work in Nature and other top journals. So I went and reviewed that literature, and his name is Fabio Berzaghi. And Fabio and us co-authored few papers, basically valuing the services of a living elephant, again, frolicking freely in the forest, not in a zoo, not tied to a tree, just by living life for herself, not even aware of our own existence. Look what she's doing. She is not only a forest engineer, she's enhancing the carbon. Now, why is carbon? Is because the world, 2015 and even before that, met and decided that to fight climate change, we need to reduce carbon emissions and grab carbon from the atmosphere and sequester it. So that's how carbon acquired its value, its price. So it started really with the whale, but then the elephant. And then UNEP called me out of the blue and said, hey, you seem to know how to value living nature. Because I used to value dead nature. I mean, I'm an expert in valuing oil and gas and all these financial instruments. But you seem to know how to value living nature. Can you value seagrass? I said, I don't know anything about seagrass. So they said, oh, you need to talk to this famous guy named Carlos Duarte. And so I called up Carlos, and after reading so many papers of his, we learned that seagrass is this amazing system that it's like a tree on its side. It's clonal. You leave it alone, it grows laterally and vertically, and at an exponential rate. It grows exponentially for 50 years, and at a constant rate forever. Basically, if you have space, seagrass will continue to grow. Unlike mangroves, by the way. So with Carlos, we started working on what is the value of restoring seagrass globally. Again, why is that important? Because seagrass alone had no value, right? I've been to resorts where people were complaining that when they waded, the tourists, when they waded into the water, God forbid, their feet touched seagrass. And you see the workers in the morning chopping away at seagrass because they don't want the tourists to be disgusted with the touching nature. And turns out that that seagrass is really gold. It sequesters carbon, but much more importantly, seagrass also enhances fish stock, provides a coastal protection, purifies the water for the corals. So I started to see, again, like an accidental tourist, I was stumbling into these things with my colleagues and saying, hey, wait a minute. This is nature, living nature. Nature living for itself is providing an incredible service to humanity that we took for granted. And I can tell you why we took it for granted. That's something, that's shall I say, a deadly assumption we made 400 or 500 years ago. But it's providing a service to humanity, but yet that service is not priced. And people have to understand markets, if you don't price your service, it doesn't really matter how much you proselytize that that service is valuable. The market says you have no price and therefore you have no value, which is wrong. And we know that, but that's how the markets operate. So that work, we started with the whales and the elephants and the seagrass and now we're working on the bison and even we're valuing water and all that stuff, is to basically educate the markets, not the conservation people, the markets, that nature alive and well, nature living for itself, is not only intrinsically valuable, which they don't care about. People in the markets don't care about words like these. But once you say, but it's valuable for you, it's valuable, it will impact your bottom line, it will impact our society, our economy, our lives. Then you start to have a conversation and you have to use language that the markets understand. Now, I spent 25 years at the IMF in the policy circle. I guarantee you, policy, people in policy and people in markets, you can proselytize to them all you want. At the end of the day, they're going to say, what is the cost and what's the benefit? And if you can't use that, if you cannot use their language, they will not hear you. They may be nice and listen to you until you leave the room, then it's business as usual. So my whole approach with my colleagues was to basically educate the market. So we're not preaching to the converts. Okay? The conservation people are the converts. They already know the value of living nature. We are talking about the value of a living nature to a market that only understood nature extracted or dead nature. We know how to value oil, gas, everything we can extract, we know how to value. But what's the value of a tree living outside your window that is not a fruit tree? If you ask anybody passing, you say, what's the value of that tree? They'll say, oh, timber. Because we are so brainwashed into thinking as nature as a resource. But you say, no, that tree just existing for herself is incredibly valuable, aside from her right to exist, but also the fact that she's sequestering carbon, she's capturing water and keeping the soil moist. She is responsible for the rains downwind, right? She's enhancing soil quality, water quality, among the other things that a tree. And guess what? Thanks to advances in sciences and technology, we can now value many of these services. So the science now has advanced quite a bit to tell us that it's not about trees only, it's about fauna and flora, and that includes the blue and green. It's really about the web of life. That's about life within the forest, life within the ocean, that is actually valuable, right? Otherwise, we would have like a Dead Sea. Have you ever been to the Dead Sea, Steve? It's just a bathtub, but there's no life in it, right? You can't even dive. So ocean is not a bathtub. No, ocean is brimming with life. So basically our work is about how do we value the living nature, and in particular, the regulating side of nature. Nature that regulates the climate, nature that provides coastal protection, nature that enhances water quality, so things that the markets never really valued. That's what most of our work is. And then once you do that value is how do we bring markets into this? Meaning how do we create a market around the regulating side of nature such that the markets don't do harm? Because markets by themselves are not interested in equity and justice and all this stuff. Markets are about efficiency. You have to bake into the markets issues that you care about, such as equity, and such as inclusion and other things. These have to be baked. So how do we build markets around nature that are nature positive and people positive? And I'll stop here.
No, thanks. And fascinating for all of us. I'm going to ask another question before we open it up. I know other people are already lining up with comments and questions, but we're largely a frontline, so smaller to medium-sized organizations. Some are even one-person organizations. Some of us are working on protecting whales, elephants, other creatures that you referenced, habitats as well. And we all have this burning question, which is, how do we, given what you've just said, practically speaking, how do we better resource? How do we power our protection and regenerative work? We're aware that there's carbon credits, biodiversity credits are the latest thing, but for a layman or for a frontline group that's pretty busy out there protecting all the time, how do we how do we package or bundle our work to make it relevant and get some of those carbon credits, or be linked to them so that people who are buying them are basically helping to pay for us to maintain and sustain that protection.
Yeah. So there, we don't have much time to get into the history of the carbon market. But so let me give a sort of a short answer and then happy to entertain questions around it. It's not really about carbon. It's not really about biodiversity. Is about a new paradigm, a new economic paradigm that is much better than the one we're living in right now, which is responsible for the destruction of nature and the climate calamity that is all self-inflicted. So, to my mind, is that one of the reasons for this, for these crises that we are going through, is because the current system does not understand, hasn't yet priced the value of the living nature. Nature living for itself, and nature is also helping us to fight climate change. That the fight of climate change is what brought carbon into this picture because the Kyoto Protocol and the 2015 Paris Agreement basically said, the sufficient statistic for how well we're fighting climate change is how much carbon are we avoiding? That's the avoidance of emission, if you like. And how much carbon are we grabbing from the stock of carbon that the 500 gigatons that are already sitting up there, legacy of 400 years, 500 years of industrial revolution, sitting up there going nowhere. So think of it as a tap and a tub. And the tap is still, which is emissions, still dropping carbon dioxide into a sky that is replete with carbon dioxide from previous emissions. So it's not enough to to shut down emissions, because some people tell me, oh, we need to go, drive emissions to zero. And I said, dude, that's not going to get you out of the problem because we have between 400 and 500 gigatons of carbon dioxide sitting up there in the atmosphere, heating up the earth. That's a legacy. So you need to drain that tub. To drain that tub, there's only one technology that I know of that it's tried and true, and it's about 4 billion years old. It's called Mother Nature. And so we need to protect what we have in order to avoid further emissions, and we need to restore what we've lost because it's what we've lost that caused that carbon to go up in the atmosphere. So that is what we need to do. Now, you're asking me about the carbon and the biodiversity, and of course, it's not about carbon. The reason everybody is in carbon is because it's a molecule that you can measure. And if you pollute here, the carbon can move somewhere else. So it's a global. So it's a global affliction, if you like. So as a result, the markets for carbon can be global. With the biodiversity, biodiversity is by definition is local. So you have you have a river, you have a stream, you have a forest, but the impact would still be global. Think of the Amazon, for example. We have a project in the Amazon. The Amazon forest is responsible for the green water. Aside from the carbon within the forest, would be local, but the Amazon forest, it produces what's called green water, which is the rains that, and in fact, there's a name for it. It's called the flying river. If you ask people that live and work in the Amazon, they talk about what's called the flying river. It's a river that, through a process of evapotranspiration, rises and then moves its way, and it trains across all 8 Amazon countries and beyond the Amazon countries into the US and Canada and Mexico and further on. So you can have biodiversity that is local, but its impact would also be global. Now, ultimately, what we really want is a value of nature, which will include within. So, when you have nature that's thriving, you will have carbon in it. It sequesters carbon, but it's also doing a lot of other things beyond carbon. So, ultimately, the measure should go beyond carbon, but think of carbon as sort of a unit of measure on which we can build everything else. Okay, so carbon is really the short game, but is not the end game. And focusing on carbon alone is perverse, is not really the way to go. Now, how do we, your question has a number of things, and how do we do this? First, any market for anything needs demand and needs supply. Okay, I find that as a professional, I find that when I listen to people on the supply side, they only talk about themselves. Or I see people on the demand side, they only talk about themselves. And I keep saying, hey, if you want to have a market, you need the demand and supply, and we need to agree on a price and rules of engagement. It's called the contract. By the way, just because you have demand and supply does not mean that you'll have a market. The problems could be so insurmountable that you may not have a market. So it's not a guarantee. So in math, we say it's necessary but not sufficient. Okay? Now, who's going to demand the biodiversity credits and the carbon credits? You always have to ask yourself that, especially if you're on the supply side. And if you're on the demand side and say, I need, you have to think about who's going to supply me with those credits. Okay. So let's make it simple. On the supply side of the equation, you have all these countries that have natural capital. Okay, natural capital, blue and green, fauna and flora. So it's in its widest definition, includes stocks and flows. And what they can do. Now, why is there even a market? Because the world needs to fight climate change and needs to avoid the destruction of nature. There is no planet B. There is no alternative. Sometimes I hear weird stuff when I'm at conferences and I panic because I hear people saying, well, technology will get us out. Technology, dude, can solve certain things, but cannot substitute for nature. It's meant to help us save nature, help us to better our relationship with each other and nature, but it's not the solution in and of itself. So back to the demand side of the supply side of the equation is all the countries that are sitting on natural capital, blue or green, could be forest, could be mangrove, seagrass, salt marsh, kelp, whatever, grassland. Okay, potentially they could be the supply. Supply of what? Biodiversity credits, carbon credits, nature credits, right? And I can drill down through this because I have projects all over the world on these things, if there are questions. On the demand side, who is going to demand this? Because to have a price, you need the demand side of the equation. Now, bear with me a minute. 2015, when the countries met, was not about corporates. It's about sovereigns making commitments. And they call these commitments NDC, nationally determined commitments. And they were rolling 5-year commitments, but they were all voluntary commitments. So countries said, well, I'm going to go carbon zero in 2050, and for the next 5 years, I'm going to do this. So it started 2015, 2020, 2020, 2025, on a 5-year
So how
basis.
much pesa ni aje pesa ngapi ya
And
free ya huyo?
somebody's
Peter, here, could you mute me? Sorry.
Yeah. So, and then you
So,
have now countries making commitments between 2025 to 2030. Okay. But what happened in 2015, they made commitments, and they hugged each other, sang kumbaya, and went and then continued to pollute. So the markets tried to fill the void of what the sovereigns should have done. And that's how you get the VCM market, the voluntary carbon market, was trying to do the job that should have started with the governments themselves making commitments that are binding. So the voluntary carbon market started with the markets themselves doing the job of what I call the visible hand. The visible hand was not there. So the invisible hand of the market tried to do the job, and they didn't do a great job. They tried their best. Okay, that's why you keep seeing problems with the VCM market. Some of them are teething problems, but some of them are structural problems having to do with that markets can never provide the socially optimal level of a public good. Samuelson won the Nobel Prize in 1954 for just that result, which all economists understand very well. Anyway, so who made the commitments? Corporates made the commitments. Microsofts of the world, Google's, blah, blah, blah. And now there's a whole list of corporates that said we need to go carbon zero, carbon negative, carbon neutral. And it's on net basis, meaning it's not enough to reduce our emissions, but we're also going to purchase carbon credits, which have to do with pulling carbon out of the atmosphere. Okay? So that's the demand side of the equation. But that market itself also is changed quite a bit because it's not enough. Corporates realize it's not enough to say I'm buying carbon credits, but they really want to look like good citizens of the world. So they're saying, oh, when I buy the carbon of seagrass, I'm also investing in seagrass. So I'm also enhancing food security. That's an SDG. I'm also providing coastal protection. That's an SDG. I'm also alleviating poverty. That's an SDG. You see? So corporates start to realize that they need to go beyond the carbon side to the biodiversity side, if you like, because now you're talking about carbon and fish and coastal protection and alleviation of poverty, creating employment. And so corporates want to showcase on their website that they're good citizens of the world. Why is that important? First, to please the regulators. If you happen to be in Europe now, there's something called nature restoration law. It's no longer about carbon. It's what is your net impact on nature? And it better be quantitative as of 2027. If you're in the UK, it's called nature net gain law. Australia has its own rules. And so so their regulators are doing a catch up. The public has gotten educated about the fact that we really need to save nature. So the public are demanding of corporates. I was visiting, I don't want to name names, but I was visiting the head of human resources at a top company in London. I mean, this company, when I was a kid, coming out of college, I would have died to work for them. They're having a hard time recruiting people. Why? Because the young people coming out of colleges are saying that you're an extractive industry. We don't want to be part of you. Hey, thank God they woke up. The new generation better than us. So they're saying, I don't want to work for, I have a son, he's 25 years old. He says the same thing to me. I will never work for these, this, and this, and this, because they are involved in extraction and destruction of nature. You see? So corporates on the demand side of the equation are saying, we need to showcase that we are good citizens of the world through our positive impact on nature, not only on climate, but on nature. And so that story then becomes much bigger than just carbon. Talk about biodiversity. And of course, when you're also dealing, like I have projects with indigenous people, there's a social aspect to it, there's a cultural aspect to it, right? And these are things that they can become also credits that can be added to when you build the credit. It's no longer a carbon credit or even a biodiversity credit. It becomes a nature credit. So you have the demand side, you have the supply side, and the question is, can we find a meeting place? Can a contract be structured so that, and a price that would satisfy both sides of the equation. This is where finance comes in. But in order to do that, there are certain things that have to be fulfilled. Okay. And that's why people tell me, oh, the price of carbon in one market is $5, but another market, it's, they say, well, Ralph, there's variety in the price of carbon. I said, uh-huh. And, well, how can that be? I said, well, do you like wine? Yeah. When you walk into a wine store, there are many bottles of wine. Are they all the same price? Some wines are $2 and some wines are $1,000. What's the difference? Quality. In the case of carbon or biodiversity, it's the quality of the management of the project, which we refer to as governance. Governance of the project is what distinguishes one project getting any demand versus a project getting $80. I'll stop here.
Yeah, no, that's a good segue. And I know there's a couple questions piled up. Let me just sneak one comment in here. You don't need to respond to this because Ralph and I have talked separately about this, but you're just getting into there. I think this is rough. But I'm glad you touched on the fact that, we're seeing an increase in demand from a new generation for corporate, social responsibility. We're also seeing some new regulatory, compliance measures that are going to comply people to, mitigate their impact on nature. And as we have been working on our new token, we have become very attracted to the biodiversity credit for the reasons you mentioned. It's kind of more all-encompassing. It encompasses people too, which is nice. It's all about what we're doing. But I just want to just mention to everybody, we are working on tokenizing in and setting up a verification network that is decentralized to verify any of you that you exist, that you're doing what you're doing, and then that you're taking these actions and that you're having impact. So, and because it goes back to the issue you're talking about is trust. Is this demand does it?
I think we may have lost Steve. But in fact, let me, if I'm allowed to finish the sentence, fully agreed. It's all about trust, and how do you build that trust? I work on many projects, and it really boils down to how do you get the demand side of the equation, be it corporates, and by the way, now sovereigns are back in it because of the ITMO market. If you're not familiar with it, they are nationally transferable mitigation commitments or offerings or something like that. It's basically bringing through Article 6.2 and 6.4, it's bringing the sovereigns into this market, which to my mind is a good thing because it started with the sovereigns. It's the sovereigns that met in 2015 and made commitments that they did not live up to. So what the ITMO market is doing now is creating a sovereign commitment through the sale of whatever NDC they commit to another sovereign. But it really boils down to, as Stephen is saying, to the trust. And tokens play a key role in this, Steve. Tokens, to my mind, play a key role in a number of things. One, it creates agency. You see, the thing with the climate is people get overwhelmed and they feel no agency. Like, I can't do anything about it, right? I might as well have a big party today. And the solution has always been, by the way, a radical solution, which is, I think, is embedded. I looked at your stuff and I really like it because what's embedded in you is you can even bypass the corporates altogether and go to the individual themselves. Because ultimately, the solution, to my mind, of the calamities that are self-inflicted, be it the nature and the climate, is basically because we took the decision away from the individuals like us, and we left it with the politicians and we left it with the corporates. What tokens have a way of doing is bringing the individual back into the picture, providing the individual with that agency, saying you can determine the fate of what happens. You are part of the story. You're not somebody sitting on the sidelines watching a corporate make its decisions. And what tokens can do is bypass the corporates. Why corporates? Because remember what corporates, until hasn't changed to my mind, and I was part of that system, is quarterly profits is all that matters. So when you try to talk to a CEO about nature, remember nature is a long-lived asset. That's why indigenous people did well by nature, because they think 6, 7 generations ahead. A corporate CEO is just thinking quarterly profits. That's it. So here's an asset that is long-lived, being entrusted to someone who's thinking short cycle. Politicians are the same. They're thinking short cycle, right? And so they are not the right, you don't have a good match between who ought to be the investor in Mother Nature. Pension funds would be a much better deal. Individuals would be, right? Family offices are good, pension funds, insurance companies, because they have long-term interests. And so what tokenization does, by allowing the household to come into this market, you are bypassing the corporate bottleneck, which I think is a problem. Okay. So one is that. Two, you're absolutely right. Tokenization, part of why some carbon gets, or biodiversity credits will get $5, another one 80, is the trust, is the verification, is the transparency, is the traceability, and tokenization helps you on all of these fronts. So that technology of tokenization and blockchain can really be used to get over the hump of what we refer to in economics as asymmetry of information, right? And commitments over time and space. I'll stop here.
Andre Kushlan, formerly of the World Bank, by the way. So speak your language. Andre, over to you.
Thanks. Thanks, Ralph. I had a question at the tip of my tongue. How many ties did you used to have? You described
47.
Okay, well, that's a good memory. Well, there are at least a couple of people on this chat right now who worked across the street from you for a career. Bruno Laporte is also here, my former boss of my boss at the World Bank, and we both also had an experience similar to what you described about your blue whale immersion. We had it with big cats, tigers, snow leopards. You must have heard a bit about Bob Zelig, and so we were part of the team that made it happen. Anyway, so a lot of sort of similar thinking and emotions. But what really struck me, you mentioned something that the corporates, they are still kind of astute to. They're not listening to all this enviro speak, that it still has to be translated into the market speak. And I guess part of the puzzle is that there are tons of environmental economics literature. It's been there for decades, and you can, furnish walls and walls of bookshelves with that. And someone on the chat mentioned Pawan Sukhdev with the T project, the economics of biodiversity, and there are many others. So still in that regard, if the corporates refuse to listen to what hordes of environmental economists are trying to say to them, I guess the problem is not with the shortfall of supply of knowledge on environmental economics, but rather the resistance to listen to it. And then what you described as your son saying that he won't work for some of these big corporations means that the shift is going from shareholders to stakeholders, and that now even the corporate world is more pressed into certain behavioral changes by the common folks, like your son and college graduates, although they're all getting out of school in deep debt now. And the world you used to work on fragility countries, which was a relatively small niche in the big world of economic development. Now I think the whole world has become fragile. So in any case, this is a remark, but my question is, isn't it, if it's still an issue with having to translate, the environmental economics into the corporate speak, wouldn't the large language models now be a good tool to help make those translations? All these AI tools, and whether or not it could be a nice startup in the world of IMF and World Bank retirees to fuel such models. Anyway, and how, yes, and how to actually bring it closer to the power of the masses, that the small but many means big. That's the nice formula.
I
So
wish we
thank you.
had wonderful to hear you, 100% with you. Sometimes there's something called social learning. I learned that from Sir Paul Collier at Oxford. Sometimes and I learned that in fragile states. You think you know you think you know the solution, but the problem is that the other side of the equation are not ready to listen. So you proselytize, but it falls on deaf ears. And so so one thing you learned when I learned from my work on fragile states, being on the ground, is you need to have sustained and patient engagement. This is the same here. The corporate world may not have been ready back then, but certainly is ready now. And I'll tell you why, for a number of reasons. If you look at new studies, especially if you go to the ECB website and you download none of our articles now that have done surveys of businesses across Europe. 85% of all businesses in Europe, I'm surprised not 100%, are subject to nature and climate risks. And so the balance sheet of these corporations, their bottom line is very much affected. Here in our own backyard, here in the US, I mean, insurance companies have walked out of Texas, California, Florida, Mississippi, Alabama. I have friends in California can't sell their homes because there's no insurance. So what's happening is the day of reckoning has arrived. But that's nature from the risk point of view. You're looking at nature as a risk to the balance sheet. And insurance companies, I mean, if anybody knows how to insure anything and how to use the law of large numbers, would be the insurance companies. For them to walk away from a state, from a sector, tells you that they figured out that there's no price that will compensate for the probability of loss, or even they can't even estimate the probability of loss. So what has happened is what the politics are and how the market is structured has nothing to do with the fact that there's a physical risk coming at us at a very fast speed. What I'm really trying to say is the following. Nature, loss of nature and the disappearance of biodiversity, and I see my dear friend Niall McCann on here. I mean, if anybody can tell you about it, it would be him. We're losing species at such a fast pace and losing nature, land degradation, ocean acidification. This is a physical risk. It has nothing to do with the politics. It's coming at us at a very fast speed and saying whether you're ready or not, whether you're denial or not, it doesn't really matter. I'm coming at you. You're ready or not, it doesn't really matter. And what's happening is businesses that even that we're in denial are seeing it impacting their balance sheet. To the point that take a look at the ECB, okay? The ECB used to take as collateral from banks anything that the banks would put to them at 1% discount. Now they've implemented recently something called climate factor, which means now when the banks go to borrow from the ECB, from the European Central Bank, and they put up a bond portfolio, the discount is going to now follow a climate factor, which means the discount could be 5, 10, 20, 30%, depending on the exposure of that bond portfolio to climate and nature risk. So things have shifted. Business-wise, they're shifted. The young generation is far more aware of what we're going through. Investors, I know a lot of investors are saying, I do not want to be involved or invest my money in extractive services. And the regulation in Europe, especially, in the UK and Australia and Japan and other places, are basically doing the catch-up. So what you're seeing is the terrain is shifting. I have seen it shift since I started this work in 2017. It's a completely different. Now, you mentioned large language. Technology is here, and we can use technology to help us, definitely. So it can help us, as we're saying with Steve, the tokenization, the blockchain. can increase agency, can enhance the transparency, accountability, verifiability, and therefore build a trust between the markets, between the demand side of the equation and the supply side of the equation. What I would like to avoid, and here's a caution to, because I go to all these conferences, I've avoided going to COP30, but I was at the others, and I heard something which disturbed me, because some people will say, well, technology will solve the problem. And some people are even saying something more egregious than that, saying, well, carbon capture machines will do the job. Really? So, so technology should complement our efforts to help protect and save nature.
We'll
Technology
all
is
go to
never
Mars.
meant exactly. So large language models, AI, all of this should be used to help us structure and educate the markets about the value of the living nature, which is something that the markets never paid attention to before.
Al McCann.
Thank you.
Thanks, Stephen. Hi, Ralph. Lovely to see you.
Good to
Great as ever. You ended your presentation with a question, which I'm going to put back to you. In the simplest possible terms, how do we build markets around nature that are good for nature? And so you've been talking around it, but let's get right to the point. So how do we put a price on a whale? A price that's agreed internationally, that can go up and down, that can be traded, that has supply and demand. Do we need precedent? Do we need a single government? Do we need the insurance company to say that? Like, how do we create markets that are good for nature?
Beautiful. So let me give you an example of what's happening in the Bahamas, because that's a concrete example. The Bahamas, through the work of Carlos Duarte and a few other scientists, discovered that they're sitting on 150,000 square kilometers of seagrass. The largest seagrass meadow is sitting under the Bahamas. It's published in Nature article. And in order to do that mapping is ingenious. They use tiger sharks. They outfitted tiger sharks with cameras and let them loose, and tiger sharks like to feed on sea turtles who like to feed on seagrass. So the tiger sharks mapped for free, by the way, not anymore, okay, for free, the seafloor of the Bahamas, and discovered they're sitting on 150,000 square kilometers of seagrass. Just to benchmark what I'm talking about, all of Spain is sitting on 1,600 square kilometers of seagrass. So the Bahamas has the largest seagrass meadow in the world. Okay, so what? Well, that 150 is down to 93,000 due to anchors of ships, coming through and destroying sewers, untreated sewers runoff into this, destroying the seagrass. So if you were to take that 93,000 and rebuild it so protect what you have, conservation, that will generate for you about $12 billion in carbon credits. If you were to go from 93,000 to 150,000 back restoration, that actually will generate over $100 billion from carbon credits. Now, science is there, valuation is there. Now your question is, well, I need the markets, Ralph. Well, okay. So what you need is, first of all, is what Steve was talking about, is the transparency and accountability and traceability. So you need that platform. Why is that? Because I've been in contracts all my life. And by the way, once you get to a market, you have to bring that machinery of markets into this. So now you say, yes, nature has its own, it has to be tailored to a living nature. We'll talk about it in a second. But let's see what's really going on here. So suppose I'm Microsoft and I'm in Seattle and I want to buy the carbon of the seagrass of the Bahamas. Carbon, not the seagrass. The underlying is never sold. That's principle number one. Okay? And that's at least our principle at BGF. Our advice always to local governments and indigenous, never sell your asset. All you're doing is you're leasing or you're selling the service of the assets. Number one. Okay. So now I'm Microsoft, just for example, and I want to buy the carbon of the seagrass of the Bahamas. What am I really worried about? Well, what activities are going to generate those carbon credits? Protection or conservation and restoration. which means the government of the Bahamas would have to commit to doing activities that will protect and restore the seagrass, right? But if I'm on the buyer side, what assures me that they're going to do this? That's the governance of the project. And that's in every contract. Yeah, you want work on your house, the guy contractor comes, tells you, I'm going to do this, but that's all talk. You need verification. How do I know you're putting the best material? How do I know you're doing the best work? It's the same thing in the concept of nature. So in the case of the Bahamas, there's a platform that basically chronicles everything that you do, everything that the government does. It's using tokenization or blockchain technology to track every single action that is taken, every single promise that is made, every transaction, financial or otherwise, is captured through blockchain technology digitally on this platform. Now, this is not a trading platform. Be careful. It's not a trading, it's just a data platform. And what it does, it sends a signal to the market in real time saying, hey, here's what's happening on this project. Now, why is that important? Because if I'm a potential investor and I want to know what's going on, I don't want to track Ralph down. First of all, I'm not involved, but let's say, track whoever is in charge and say, hey, can you send me a PDF? No, what I do, I have a dashboard. I type in, show me what's going on. And the dashboard gives me in real time who paid what, who got what, who did what. Okay, so that's one. Two, what I forgot to mention is the first thing in this market or in any market is what's called provenance. Do you own the asset? Can you prove that you own the asset? It's like I want to sell my home, right? First question in the US, where's the title? Do you have the deed? It's the same thing. Why? Because people come to me always with projects, Ralph, we need, and I say, can you show me that you own it? If you can't show that you own it, forget it. There is no market. You're back to philanthropy or you're back to government giving you some aid. But if you want astute investors to come in, they're going to say, who owns the asset? In the case of the Bahamas, they issued and gazetted the law. It says anything blue or carbon credits or blue credits belong to the government, period. So one-stop shop. So you're a potential investor, you don't have to go searching for who I'm going to be dealing with. You're dealing with the government. Next thing is this platform. This platform captures everything that is being done and is signaling in real time to the markets, here's what's going on, come and have a look. So I can start looking from the inception of the project itself, you see? Second, what methodology are you using to protect and restore your seagrass, right? And we know out there are methodologies, published methodology, Vera, Plan Vivo, Gold Standard, blah, 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 whatever it is, that methodology would be chronicled on that platform and followed. However, if you're the methodology company, you cannot be the verifier. And if you're the verifier, you cannot sell the credits. That's the mistake of Carbon 1.0 market. The mistake in the first incarnation of the VCM market is that, and I'm not going to name the companies because you know them, they were the methodology setters, they were the verifiers, and they were the registry. Come on, man. I've been in the markets for 35 years. I've never heard that before. So in the case of the Bahamas, you have Chinese walls. Whoever is doing the MRV cannot do the verification. Who is doing the verification cannot be collecting, the data. So what was created is these Chinese walls to make sure that you have multiple eyes on the same thing. What happened in the case of the Bahamas is Pricewaterhouse got interested, PwC, and they said, we love this project, so we're going to put a wrapper around it. And then who got interested was the syndicates of Lloyd's came along and said, we've never seen a project like this with so much transparency, so much accountability. And guess what? We are going to insure the credits against operational risk, political risk, and hurricane risk. This is not parametric insurance. This is the real insurance. So now, if I'm an investor, what am I really worried about? You see, you de-risked the project for me. So what you're selling me is how do you build that? That's how you build. And by the way, that model is scalable anywhere else. You can take this anywhere else. The names of who's involved will change, but the functions would stay the same. You need the science. You need someone to do the mapping. You need someone to chronicle what's happening. Each one of them, right? Separate entities, cannot be the same entity, right? I usually, what BGF does, we produce the forwards because we know the physiology of the asset. So I know how, for example, how seagrass grows and the rate of sequestration. So I can produce what's called the forwards, the projection. Why is that important, Niall? Because unlike the carbon 1.0, where you had to wait 3 years till the carbon accrues, and you're asking communities to sacrifice and pay up $700,000 and then wait. What this does is you sell the forwards today, so the money comes into the conservation today. And who is waiting is the investor. And that is standard in financial markets. That's standard. Financial markets, we all work in forward contracts or futures if they're on organized exchanges and so forth. So what we did is in the design is, because that's where I spend most of my time, is how you design these projects so that they speak the language of the markets. So science, you have to ground yourselves in the science. Then you need the valuation. In fact, we created a subfield called science-based finance because we work with the scientists to understand the physiology of the asset, because seagrass is not mangroves. And I see this mistake with people with me on stage. They say, you know, carbon of the seagrass are mangroves. I'm like, dude, no, mangrove is a tree. It doesn't go laterally. It grows up to 10 years and it stops. Okay? Whereas seagrass is a tree on its side. It goes this way and that way. So the market will shake up. But the answer to your question is we need to go from science, the valuation, to what the market, meaning what does the demand, and this is where the mistake is made by people on the supply side. I have this great project. I have a lot of people come to me. I said, yes, but who's demanding it? And what are the assurances that you are putting in place? By the way, it doesn't have to be perfect. Let me clarify something. I worked at the IMF for 25 years. I worked on countries with very little data. So it's not the completeness of data that is needed, it's the quality of data that is needed. So I don't care whether you have, because I've also dealt with countries at the IMF that had a lot of data, which was, I'm sorry to say, BS data. Okay, I wouldn't trust it. But so the fact that there's gaps is not an issue. What markets don't like to deal with is knowingly fake data. But to have gaps in data, that's fine. In fact, that's how we make money in markets, through uncertainty and risk. That's not the issue. And my dear mom would always say, don't let the perfect be the enemy of the good. Because some people say, oh, we need more science. I said, that's an excuse to do nothing. Okay? My mom would always tell me, start now and perfect later. Start now. And we are in the 11th hour, Steve, and Niall and colleagues. You know, the time is not on our side. But let me repeat 3 principles so that people don't misunderstand me. We always advocate never to sell the underlying. You keep ownership of the asset. 2, because you are making money is being made of a living nature. That means the money that comes from the sale of the services has to look after the nature in perpetuity. And I'll explain this in a bit because that's very important. 3, none of this would work if the stewards of nature are not part and parcel of this equation. Not as recipients because we're so kind, we want to get, no, because we need their knowledge. We need their relationship with nature because they've been the stewards of nature. And during their watch, nature was thriving. During our watch, nature is dying. So we need to recognize that we don't know and learn from them and basically put them in charge of the project, not as just beneficiaries. So these 3 principles, and I have projects from the Maori projects. I work with Native Americans here in the United States on the Bison Project, to local governments. It's always the same thing. One thing I want to caution everybody, is when you deal with indigenous people, you're very good on many fronts. But when you're dealing with local governments and the politics of it, there are issues that arise that do not arise when you deal with indigenous and local communities. For example, indigenous and local communities, they think 6, 7 generations ahead. That's the nature of how they work. Everything is common resource to them. Whereas we in the West, we have something called private property, private goods. In fact, we split nature into private goods, common resource goods, and public goods. To indigenous people, it's just nature, and it's all shared. Anyway, having said all of that, one thing I worry about is when governments make commitments, they need to put their money where their mouth is. Meaning it's not enough that they say we're committed, because let me tell you exactly why, and this is an answer also to Nile, is when you're selling forwards, let's say I sell forwards 5, 10 years from now, whoever's buying the forward is going to say, what assures me that the government is going to keep its word? That's a valid concern. Why? Because today the prime minister of that whatever government may be pro-nature. What about the next guy? Will he or she be pro-nature, or they'll decide to remove the mangroves and put a marina there? In language of contracts, we call it time consistency or renegotiation proof contracts. What will guarantee the demand side that their exposure forward is protected? And for that, there is a solution. There is a very good solution for that. We can create endowment funds, trust funds whose governance is outside the full control of the government, and so there are solutions to these things. But I'm saying these are things that affect what we call the governance of any one project. And when you deal with these issues through tokenization and blockchain and you get the higher price. When you don't have any of those, then you get the very low price or no price at all. There are no takers. I'll stop here.
Bruno Laporte.
Well, it's very quick because we are at the end of our session. But Ralph, absolutely amazing conversation. And Steve, I'm wondering whether we couldn't have another session with Ralph, because there is lots of stuff that we would like to get into, like design of projects, some of the best practices and where you have already been able to implement some of these things. So I don't know whether that would be a separate session or with a different group. I don't know, Ralph, also if you can recommend a couple of your most relevant papers that go over what you covered today. But I think we need more. That's the extent of what I wanted to say, and I need to go to a different thing now. But that was fabulous.
Thank you. I would be delighted to continue the conversation. I can send you also papers. I'll send them to Steve, and he can distribute.
Thank you.
Well, I think this is a good segue. We are an hour and a half in, but we have a white paper that speaks to so much of what Ralph was talking about here. And by November 15th, we will have had input from those who wanted to read it and review it. Like you said, it doesn't have to be perfect. We're going to build this ship as we sail it, but we're trying to get it as good as we can make it in terms of the verification network. And one thing we've noticed, which we'll get into more next month, is, this big canyon between where people are at doing frontline work and getting rewarded. And we want to wade them into the water. We'll talk about that next month. Please, everybody, come to that. But one way I think we can keep the conversation going with Ralph is to get his inputs on that. And yes, let's come back and review that, how we're doing, because we want to build a trusted verification network that adds value to living nature. So this is exactly why I'm hoping you would come today, and you did, and thank you. You're 30 minutes past. We've got almost 30 people still here listening, but I think thank you so much for your extra time today, Ralph, and thank you everybody for coming. For those who want to join Earth Team or even just be part of our daily chat, Bartica did put into our group chat here how you can do that. Go onto our website, put your name and pin on the map of who you're doing, what you're doing, and we will start to tokenize that and reward people with tokens even starting next month. So thank you,
Steve.
Ralph.
Thank you
And-
all. And thank you for giving nature a voice on your program. Thank you.
This is not the end of our discussion with Ralph, it's just the beginning. Thank you, Ralph.
Thanks, Ralph.
Thank you, guys.
And
Bye.
see you next month for our before the town hall, which is going to be an interesting one. Thanks, everybody. Good night.